TGIF, everybody. Good NFP day. Let's see if we could react to the reaction today. Everyone doing okay? How are my trading warrior brothers and sisters? Everyone doing okay? Have a decent week? Morning, Brock, Amit. Always good to be back, hanging out with the team. Sharing our ideas with you, trying to build you guys up. Shahab, how are you? Okay, so we all talk about confluence and confluence between, say, a moving average comes in with the fib count, etc. So, sometimes you could have confluence just based on price by going to a different time frame. Family. And I want to show NASDAQ here. I know that, we got into a range and the market came off yesterday. I'm not sure if that was it. Something that tells me it could be is the weakness in the yen. We talked about the yen earlier in the week that should have been at 110 with all the risk on, and really had a negative day after the Fed followed through big time yesterday. So anyway, getting back to the NASDAQ, as you can see right here, it's about 110-point range, just a flat line across. So should we break out over 8120, the measured move, maybe some people say we're getting like a little head and shoulders here. But what I like about it is it measures to this. So this gives you about 8230, right? 110-point range in NAS 100. And this is actually where I'm looking to short the NASDAQ 100. So if I put my cursor on, can everyone see this lime green line? So there it's going to come in around 8220, 8230 right there. So you have some confluence. Should this fulfill its count, is going to get us up to, Ellioticians might call this an ending diagonal. You guys know what I look for. And so I think the NFP can blow this out of the water if the market doesn't like it. But if not, I think, we're only 100 points away or so from that line. Let's see. Call it 150 points away from this line. Okay. Dollar, another bad week for the dollar. Tried to stabilize. I don't know, it looks like it's Wile E. Coyote sitting on a ledge, and if you just want to be arithmetic about it, you would take this high, 9967, and this low, so call it 250. 250 from 9714 is going to get you 94.5, which is a bit higher than the speed line that I have at 94-ish. And we talked about Swiss earlier in the week, talked about Grega's target, and I thought actually we could go beneath 96. Pretty negative week in Swiss, like the dollar. And when Grega was on, he talked about trading the Swiss instead of trading euro or cable because of all the Brexit stuff and noise. So that's working out pretty good. And this is hanging on by a thread. I actually, traded it from the long side and made some money. It still looks to me like if I'm right about a NASDAQ blow off, that crude could hold in here. Okay. And I don't know, I guess Greg and I had the same market dream, but he had an alternate count that could take it up to 59 for a short. So I think it's a decent bottom pick, but guys, it's a red event day for me. This is probably more important than the Fed. And I'm flat. Okay, so my bias is to wait for that triangle in NASDAQ for next week. I can't find a reason to buy the yen. which doesn't line up with the fact that I didn't think yields had peaked yet. I still thought yields could make their way up towards the 2% level on the 10-year. And the way TLT looks here, guys, so we have a little bounce. Look at this formation that's developing in TLT. So it's my view, I guess it could have been completed here, but it almost looks like a descending triangle to me. So call it 149 and 37.12. I mean, that would take Treasuries TLT down to 125. Although I do think that we will have like equality, we'll flush out the lows here, and I'm not looking for 25. I think 32, 33, but you never know. And, you know, things get rolling. So this would say, if I'm right about this, risk on is an over, or this ends risk on as yields start to climb and the markets start to worry about it. So the team's head is already into the weekend. Where's the gap on the 10-year in TLT, Brock? There's gaps all over the TLT. I mean, you could find it here, left an island. They trapped people up here. Now they've trapped people down here. But to me, it looks like a descending triangle, something like this. So I don't know what happened to trend lines. Oh, here it is. Something like this. I'm going to turn it over to the guys, and they're going to get you all prepped for the NFP today. Doesn't it look like something like that? But it doesn't jive if it's over for the yen. Anyway, this is a textbook descending triangle, and you're wrong over the triangle low. And, you know, if I didn't already have like 132 in my head, I would be talking lower numbers, 127. I think that would shock people if bonds did that. I don't think this is the high. So this is still corrective in my view, one more washout. Then I think risk off happens in a big way because people buy bonds, not because of the Fed, but on a flight to quality. The only other thing I could think of, and most people don't think it could happen together, and I don't know why not, is that both bonds and stocks go down together, nowhere to hide. And higher yields will pressure gold. So we'll see. It might just be the euro that gets all the flow on risk off. We'll see. So hope you all had a great Halloween. I was going to put on a paper bag and call it the unknown broker. If you've seen a commercial, I forgot who the guy was, but he wore a paper bag. Oh yeah, it was a commercial for the markets. Was a broker, and he had what was called the brown bag broker. He had a paper bag over his head and punched out his eyes and mouth, and had a phone bank in front of him, like the old days when you know, Blake was just breaking in. So there were phone banks, and it would ring, and he would go, "Sounds good, let's do it. Sounds good, let's do it. Sounds good, let's do it. Sounds good, let's do it," because you know, he gets paid on volume. Yeah, there you go. The unknown comic. Yeah. Okay. It was a takeoff on him. All right. Anyway, let's you know, let's see, find some things to scalp. And Blake, are you going to show your costume today?
You know, I can. I'll show a picture. And the thing is that the thing is, I have like a crappy picture. Does everybody want to see it? I mean, everybody else was taking photos, and I couldn't reach for my. You'll see. I couldn't reach.
Oh, stop making excuses. And
no, and so I expect later today.
Stop it, just so it's.
No. Seriously, but like literally, like later today, I'll probably get a flood of texts.
Hey, I'm dressed up as Dale Pinkert today.
Yeah, hey, it doesn't matter what you dressed up as last night. So I'll show you guys.
All right, come on.
In case you guys want to see it.
He just wanted us to beg a little bit. You know how he is.
That excuse is right up there with my dog ate my homework. Seriously.
The wind blew it away, still. Yeah.
So this is me.
Look at Blake.
Nice.
And my sister. So
Blake,
she's
I like the little ears you have on your head. Oh, that's your sister.
Oh, that is my sister. Yes. That's my sister. She's 9 years younger than me, but
she's the one that just got married, right?
No, she just had a baby. She just had a baby. But got married like a few years ago. Actually, recently, when you and I first met.
Okay.
There, but
she's very pretty. You have a very pretty sister.
Thank you.
Stay away from her, though.
She's mad about that. Why do you think I asked? I'm back out there on the market, girls. So
I just want to let everybody know that this costume has taken me over a year to build.
Well worth the time, Blake.
And Stelios thought it was all custom. It's not. It's I had to order most of the pieces, actually, like everything from the flight suit to the gauntlets to the armor to but everything painted.
What kind of armor do you have over your groin area? What's that?
That's actually fiberglass, and it's hard. It's harder than a cup. I could actually take a shot in the balls and but nothing would happen there. But
that's the most important part of your armor, in my opinion.
Believe me, it is.
Especially if you end up being drunk, right?
Right. No, we had a lot of fun. We had a bunch of people over at our house, and walking around in that costume was challenging, to say the least. I made it about halfway through the I went through the first neighborhood, then the second neighborhood. I'm like, I had to go back. I'm like, I ran out of beer, and I'm like, I got to go back, and I just ripped everything off and got a car and drove back to found where everybody was at. But it was fun. Anyway, Halloween is a great time. I told my kids I'd build that like a year and a half ago, and I finally did. It just took me a long time because it's a lot of man hours, and so it was a good stress reliever for me, especially over the last 6 months. Like, I'd spend an hour here, an hour there, filing, sanding, painting, ordering, gluing, and so anyway, it has been a lot of fun, but it is pretty movie accurate, and that might be the last time I wear it again. We'll see, but anyway, needless to say, it was a lot of fun, and the kids had a great time. It was actually quite funny. I should show you a video. I'll show it to you maybe next week, of all the kids in our backyard with their piles of candy bartering. Like it was like they were they were like currency traders with candy. It was crazy. It was like the open outcry pit. Dale, you would have laughed your butt off.
Nice.
Anyway.
We should hide them.
No, it's seriously, like they had bags and bags of candy that'll last well into 2020. So let's talk a little bit about the market, since it is NFP day. We got about 17 minutes until the numbers come out. Now, one of the things that I have to point out is that we do have jobs report today, but we also have the ISM. The guys in my office actually think the ISM might be the more important piece of data, because the market's looking for an uptick. Everybody has kind of low expectations for non-farm payroll, especially with I think some General Motors layoffs, the
strike,
the strike, excuse me. Yeah, I said layoff. Sorry, it's Friday. The change in non-farm payrolls is looking at 85,000. I think we're probably going to come in light. The unemployment rate is going to be important to watch. And then also the average hourly earnings, as we've been watching them, because, inflation, lack of inflation has been an issue for the Fed. So watching, the unemployment rate, the average hourly earnings, unemployment rates right here at 3.6%. Watch, it is supposed to tick up, but let's make sure it doesn't tick up any further than that. And then obviously the jobs report comes in at 85,000. And like I said, expectations are actually pretty light on those. Whisper numbers probably closer to 60,000 if I had to guess. Now the ISM number, which I actually should just put that back, the ISM number, the market's looking for a tick up towards 49 from 47.8. That's the number that might underwhelm, and that's the number that I think that everybody has to pay closer attention to. So don't think that today is not one of those days where you see the non-farm payroll, you get into a trade, and you're like, I made money, I'm going to hold on to the position, I'm done. No, the day's not over. You gotta wait for ISM today. So anyway, it's going to be pretty important. Now, when you're talking about the euro, we discussed it yesterday, to trade the range versus, trying to get too excited about, the move up in the euro. If you remember the face webinar, where I said that, if you could pick up the euro in the 30s, that would have been the play. And we dipped down to 31 yesterday, and hopefully some of you guys took advantage of that and spun out of it again. We are consolidating into some pretty key resistance. Remember, the 200-day moving average is just above the market at 112. There are options expiries from 111, 111.50, some big ones, and then and let's see, actually, let me see if I can pull up the data. Here we go. Here's a article. This will the euro may stay within range, the 111 to 112 range. Here's some expiries. 111, 1.7 billion, 111.50, 0.39 billion, 112 at 5.35 billion. So lot of expiries up at 112. Some really big ones. So keep that in mind. That's those could actually drive the market a little bit here. All right, that means that we might be capped either direction we go. You don't expect a lot of downside here, don't expect a lot of upside. Now, obviously, if we have some outsized number, like let's say we actually lose jobs this month, it's a possibility. It's not a big possibility, but it's a possibility. Then the euro might actually trade above 112, something in a situation like that. I think the one currency pair that we should all be watching right now is the dollar yen, because it was a really big failure at the when Paul Franco called the 109.29 resistance. I was floored, and it just tagged it and reversed. But I'm not floored. I'm floored at the accuracy that Paul Franco, SPZ trader, had, but I'm not floored that it actually reversed. We are developing a big inverted head and shoulder pattern. So it's still building. Good numbers today puts this trend line right into play, and then, that puts at risk a move back above 109, but a move below 107, let's just call it 80, that could, devastate longs in the dollar yen. I think a lot of them are probably shell shocked at this move from, the China, basically yesterday saying that the U.S. China trade deal is, probably not a long-term deal. But that really sank the dollar yen and the yen pairs yesterday. I traded the Aussie yen and didn't do well with it, but that news came out overnight while I was sleeping. There's not a whole lot I could do about that. But the fact of the matter is, break. What's that?
CNBC said that they sold it off based upon the Chicago Purchasing Managers Index was weak yesterday. Was that part of it?
That would contribute to some of the move, but
every other day it's a trade deal's on. Now that's
what happened right here.
Yeah. Okay.
Right here, the initial move right here, and then the Chicago PMI was after the fact.
Wow.
That Bloomberg article was released at 3 a.m. Eastern time, so it was midnight our time, Dale, and that was I woke up and I was like, mother, son of
I
a
know.
biscuit, whatever. But that, there's nothing you can really do about that. You just, take it for what it's worth. And that's the life in the Trump era. As a currency trader, you deal with headline risk all the time.
Wish he'd go to sleep.
Well, it wasn't him. It was
Oh,
Bloomberg released it. They tend to
okay.
release like negative articles when, they're looking for maximum impact, and they got it.
Oh, wow. Okay.
Yeah. So, it's because Michael Bloomberg is a big fan of Donald Trump. Not
Yeah.
anyway, but there's the dollar yen. This is the risk, if we break through 108.50. This is one of the other reasons too. Like, let's say we do have some weak data today. If the dollar yen rolls over here, this is going to be a dollar move. Yes, you could see the yen pairs move a little bit. You could see the euro yen go down or the Aussie yen go up, or whatever. But I think a lot of this is going to be dollar moves today, be it with the ISM and jobs report. So if the dollar yen does break down, that's probably a pretty good indication that the market's coming under some pressure. One of the other things that we should be paying attention to, and then I'll take Steve and Stelios's comments here, is that we have gold and silver are threatening. I mean, you look at gold. Gold wiggled me out this week. I was a little bummed out when we broke through here and reversed. When my stop was, my stop was close, and I'm like, we're probing here, and I'm like, the dollar yen looked like it was going to break out, so I'm like, well, I'll just take it off. Then now here's the dollar, here's gold up near 1520. We break above 1525 or 1520, excuse me. Gold's on its way a lot higher. This is a big pennant formation with a very shallow retracement. Look at silver. Silver looks strong. Silver looks like it wants to break the 50% retracement. We start getting above 18 and a quarter, we could really make a move here. So if precious metals rally, that is a pretty good indication to me that the dollar is going to come under pressure. Also pay very close attention to the cable. The cable's near 130 and it has not pulled back. It's just grinding up towards 130. And this is a situation where we could really squeeze people if we break above 130. Even if the euro gets capped at 112, where does that put the cable? Maybe well above 130 and closer to 131, 132. There's going to be some big squeezing going on above 130, I would imagine. So if you're trading the pound, just keep that in mind. And the commodity currencies like the Aussie and the Kiwi are holding their gains. They're holding up. I mean, we still have a bull flag in the Aussie that points to the 200-day moving average. So, which the 200-day moving average is about 40 pips away, I think. 69.50, and we're at about 50 pips away. So, keep that in mind as we move into today. There's a lot of 200-day moving average in the euro is 50 pips away. Same with the Aussie. Those are all places that could come under assault with a weaker number. I know a lot of you might say, well, a weaker number, I'm going to sell the Aussie. Yeah, I would be careful with that. I'd be careful with that. The Aussie has kind of shown us that it's more concerned with China U.S. trade relations versus risk off at this point. So anyway, just some things that I've been looking at. Steve, Stelios, I'm going to turn over to you guys here in just a couple minutes, but I'd like to hear your take on anything that I had to say this morning.
Hello.
Good morning.
Good morning again. One quick thing I wanted to say about sterling. You touched on it just now.
Yep.
There was a headline that actually, no, let's go back. We're now facing elections, right, in December, and there is two distinct parties, let's say, the Remain and the Brexit. On the Brexit side, we have the Conservatives and Nigel Farage's party, the Brexit Party. Now, what he said today, or maybe late yesterday, I don't remember, I think it was today, that he's giving Boris Johnson until the 14th of November to agree on an alliance. So he's giving him a deadline. I don't know why he's doing that, but, this is only, a couple of weeks. So it's putting pressure on the Brexit side, because if they don't figure things out among themselves, then neither of these two sides can actually, neither of these two parties can actually get a majority. So, I mean, theoretically, politicians, they can change their minds 100 times, but this is an ultimatum to Boris Johnson, and it kind of puts a bit of pressure on the Conservatives, and this is definitely not bearish the pound. But as I said before, things can change, and going into the elections, I'm sure we're going to see a million things being said. So
yeah. Oh, I'm sure. Yeah, I'm sure of that. But if you kind of, if you're like me and you're like, oh my gosh, I just, I'm going to be more focused on price action and see how the market takes the comments versus trying to make sense of it all. You know what I mean?
Yeah.
That's gonna be my take. But anyway, thank you for the update there, Steve. Good morning.
Good morning, Blake.
How you doing?
Good. How have you been?
I'm Halloween hangover. I'm Halloween hangover. I had a couple beers, but not because of that. I'm just like, I'm tired now. We had a big potluck at our house, and there's so much food in my refrigerator. It's like
Don't forget, next year I'm gonna be there.
Yes.
Hey, me too. Me too. I'm coming.
Hey, Stell.
Oh no, nobody wants you. Oh come on, now you ruined it.
There's nothing quite like trick-or-treating in the United States, especially if you're in a good neighborhood where there's abundant amount of kids. There are kids everywhere last night. It was amazing. It was a lot of fun. Anyway, all right, guys. Well, I'm going to turn it over to you, Coach. Good to have you back. People were worried about you yesterday. It's nice to have you back, and have a great interview today. Steve Stelios, good luck for non-farm payroll. Everybody else, good luck for non-farm payroll. And remember, if you have not tried out ForexAnalytix, make sure you do so. It's only $1 for 10 days. So give it a whirl, get involved with our community, jump in this chat room that's right here. I'm already in it, so I can't do it, but it's on another screen. But thanks, guys. Have a great Friday and have a great weekend. And remember, there is a time change for those of us in the United States. Just,
Indeed.
Yes.
It won't
Don't
affect,
rub it in, man.
Hey, yeah, except for most of us.
Hey, you have my room all made up in the basement.
Yeah,
for 6 months.
Yes, for the 6 months you can come live in my office.
Oh man, I could learn how to trade. All right.
Whatever. All right, guys, have a good one.
Whatever he gave me. Oh God, you know what that means when people go, whatever. It's kind of it's a very polite way of saying right?
No, he just has a good sense of humor.
Whatever.
Yeah, whatever. He has a good sense of humor.
So Steve,
hey, Steve, I missed you, man.
I missed you too. We all missed you, actually. You know how many people were asking yesterday? I had to hide. I had to hide from them. The fact that you were fooling around with the young girls, and
yeah,
gave them an excuse.
I had to get the whole day in trick-or-treating. I started at 7. Anyway, it was both a trick and a treat for me yesterday. Anyway, so what do you think, Steve? You were away for a few days. Was that it in the S&Ps or still higher? Still high, buddy.
I think, as we said yesterday, I think we are at a critical juncture here in the S&P. You can see that we are testing. Let's open it up.
I think that was one of Greg's numbers was 30.50.
We're testing the wedge. We have 1 more minute, by the way. We're testing the wedge here. So
this is an important report then, how the market reacts to this.
Yes. By the way, obviously, the market is expecting a weak print. So I don't think we're going to see any big reaction if it's around what is being expected. But I think if it's much weaker than the market already expects, we are going to see dollar weakening. Now, the question is, what is going to happen with risk assets if that's the case? Because that's a different story. Because now that the Fed has indicated that they might be pausing, of course, I don't believe that. Perhaps the market will take a miss with a positive spin. Put a positive spin to it, like okay, the Fed then might not stop cutting rates, and we might get another one, and the expectations will go high. By the way, let's see. We got
Yep, we're ready.
5 seconds. Let's see.
128. Is it 128? Positive revision as well.
So better than expected.
Yep.
US average, yeah. Okay, so data mostly positive. Let's see how the market is reacting to it.
Dollar's popping a little bit. He ends up 12. Gold down 7 now.
Yes.
Yeah.
So yes, we do see dollar strengthening. Euro USD is pushing lower. Pound is more unfazed than Euro USD. We're seeing the USD yen rebounding from this 108 area. As you said, gold is giving back some of yesterday's gains, but so far, risk, by the way, is, the S&P is taking this as good news. It should, but
Everything is.
Yeah.
Yeah.
More or less everything is good news. Yeah. I bet they would find a way to take it as good news, even if it was like 30 or minus 30 or whatever. Yeah, but not a really big reaction so far. I mean, I see like 20 pips lower in the Euro USD, for example. We're like 20 pips higher in the USD yen. We're like $5 lower in gold. I want to see what kind of a follow through we're going to get. If we want to have a look at the DXY, because the DXY also found interesting support yesterday. And
it
then
looks like we could get a C wave maybe.
Here's the DXY, by the way.
See what I mean, Steve? Higher low. Maybe that was A, B, C. Oh.
Let me show you the DXY on the 4-hour chart because it's important. We were indicating yesterday and the day before actually that this was possibly a bear flag. So despite breaking lower, we found support once again at this previous low at 97 and change. So let's see what happens from here. Keep in mind that I think it's probably a good bet that if we retest this flags broken trendline support, it might act as resistance, and we might move lower from there. So I'm really looking closely to the DXY. As long as we stay below like 97.60 or whatever it is, I definitely maintain a bearish bias. Stelio, let's give the market a little bit more time to see how it's going to digest the news. We've had an initial reaction higher in the dollar and an initial reaction higher in risk. Go ahead. What else did we have from a macro perspective, and we'll see how the market is doing.
Sure. I mean, we have a few data prints which were a bit interesting. So we had Chinese manufacturing PMI, which beat expectations. However much we can depend on these numbers, but they were better than expected. And actually, so was Norway. I follow Norway, as everybody knows, and huge beat in manufacturing PMI. And as a result, Norway's the krona is rallying today. Another beat on UK manufacturing PMI.
By the way, let me interrupt you here since you mentioned it, because it was one of the things I wanted to show. Keep in mind that not only we got a very beautiful rejection after that false break higher from this ascending wedge in the USD NOK, but we are once again attempting to break down from this trend line support. So it is going to be definitely interesting to see if the USD NOK can make this move, because if it can make this move, I think we can easily find ourselves back to 890, 892. We had that, support resistance area.
And Steve, Norwegian women are beautiful, aren't they?
In general, first of all, let me.
Can you guys tell what's on my mind today?
I have to tell you that my best man arranged for my bachelor party.
You went to Sweden.
Yeah. Yes, in Stockholm. So I have to tell you that in general.
Okay, my Uber's here to get me to the airport.
Scandinavian women are very beautiful, and no question about that.
Yeah.
No, someone said Hungary. Dominance.
Oh, Hungary, yes.
Oh, yeah.
Yeah, true.
It's the only thing they have.
Is that Dominic? That's Dominic. Yeah, you're right, Dom.
It's the only thing, the only asset in the country. Yeah, good one.
What else do we have? That was pretty much it. Actually, no, we had some PPI out of Australia, which came in line. CPI out of Switzerland was roughly in line. So nothing major apart from that. I think the main thing today, like Blake said, is the ISM out of the US. And Steve, I think if the ISM is weak, then there's a good chance the dollar pairs might
absolutely,
down.
because the ISM is going to be a much better indicator to see if the big move lower in data prints that we've had for some time and are indicating a possible recession, if we're still on the same path. So I do think as well that the market is going to react much more to a good bit or a miss in the ISM than it did or than it would in NFPs.
Yeah.
Plus, oppositely from the NFPs, the ISM is more reliable. And I'm saying that, I've already said it like 3-4 times, but some of you might not have been here. Keep in mind that, NFP prints that we get are in essence almost worthless as data. And, it got proven again a few months ago, because when they go back and check the data again, because, the data set of NFPs is based on a lot of hypotheses about, birth, death rate of companies, etc. So the initial print is very, very unreliable. I mean, we recently, like 3-4 months ago, we got revisions for a whole year of NFPs, and they revised them down by 500,000 jobs. So they had to revise down 12 months of data by 500,000. So, you see today 128, whatever we got, and that 128 might end up actually being 70, or it might actually end up being 180. So, who knows?
Yep, and also the ISM is a forward leading indicator.
Yes. And oppositely from employment, which is a lagging indicator. Yes, that is absolutely correct.
So. And I'm actually a bit surprised because, the revision on the NFPs was something like 60,000 higher. So it was a big revision. And the dollar is not really doing that much, which kind of goes with what you said.
I think, and here's the revision, plus 44,000.
Was it only that? Okay.
Yeah, in the previous number, plus 44,000, yes, because the previous one was 136.
Yes, you're right.
But as you said, Stelio, ISM is going to be very important. I think that, for those of you that want to be bullish the dollar, now that we got a decent, NFP, based on expectations, of course, decent, and we got a decent revision higher, if we do get a rebound in ISM, then we're going to see follow through in this dollar rebound. Otherwise, I think the market is going to give it all back. So keep that in mind.
Yeah. And also the ISM, there's the subcomponents like employment, the new orders, prices paid. So we get quite a bit more detail and information in that report. So
yes, indeed. We get a better outlook actually of, what parts of the economy, are doing better, worse, or whatever, because some parts are also like leading even more and some of them are more lagging. By the way, if there is one chart I want to start with today, because I forgot to mention it yesterday, and I think it's quite interesting, is the Kiwi, actually. And I want to mention the Kiwi for 2 different reasons. One of them is because we had been saying for quite some time how important this 64-25 area is. So here we are again. Now, the second reason is because this important level happens to be today also. We had, and I had shown that some time ago, we had a little inverted head and shoulders formation here, which actually played out quite nicely in the Kiwi, right? But this head and shoulders formation, we've seen that happen before, is now the head of a bigger head and shoulders formation, an inverted one, of course, right? There you go. So this makes this area even more important. So I have to say that, you know, this is the place that, you know, the market has to make a decision about the Kiwi. So if you're, you know, bullish the dollar, I think this is an excellent place to be selling the Kiwi, because we're definitely on a very nice confluence of resistances. And, you know, if it is to move lower, it should do it from here. But keep in mind that if we break out from here, then we trigger a head and shoulders formation, the bigger one, which would point to a move, let's measure it, towards 66.5 cents, as you see. So quite a nice move. So this is the chart I wanted to start from today, the Kiwi. Now, other than that, I can't agree more with the obvious. I mean, we said it yesterday as well. The cable is breaking out, and you know, you shouldn't be trying to fade cable strength. I mean, you want to fade, you know, you want to fade dollar weakness, do it elsewhere. For example, you know, the euro obviously seems weaker lately than the cable is, and especially if you have a look at the euro pound. We were showing that yesterday, euro pound is probably about to take another dive lower. You can see it here. I mean, it's very heavy. It spent several days consolidating in a symmetrical triangle, and it looks like it wants to, you know, make the next move, probably to complete this this bear flag, which points to 84.80. So, you know, even having a look at the euro pound, you know, you want to fade dollar weakness, you will have to choose between the two of them to do it with the euro, in my opinion. Keep in mind that oppositely from the cable, the euro hasn't actually broken out from, you know, all important levels here. I mean, there was one descending wedge, the one in purple, which we have already broken above, but there is another one, you can see the red trend line here, which we haven't done yet. And most importantly, if you look at this smaller wedge, you know, with the purple trend line support, but the red trend line resistance, it also confluences with two more important resistance areas. And it is the 61.8%, sorry, the 61.8% feed from this move lower and the 200 daily moving average. So 112 is a key level for the Euro USD. I still think that the Euro USD can surprise people by moving, you know, higher from here and actually squeezing people in more or less in the same manner that the pound has done. But I do believe that, you know, it can also end up producing some type of a correction prior to doing this. So now that this already has happened, so what I'm talking about would be something, you know, like this. Not unlikely, right? So now let's go back to the USD yen. Where is it? There it is. Okay, so USD yen. I have to say that probably this move lower sent a lot of people a big message about, you know, making assumptions. I mean, if you remember, one of the things I didn't want to do is trade the USD yen, because the USD yen in essence doesn't want to do much. And, you know, despite having to be bullish as long as we stayed above that trend line, you know, I mean, momentum here was very, very weak. So we're now back. We've retested this 108 area. Can we actually rebound from here? Yes, we can rebound from here, but would I be trading it? No, I wouldn't. So I don't know what to tell you here. I mean, yesterday's candle was a very nasty one. The fact that we had a false break above the 200 daily moving average the day before that is also, you know, quite a bad omen. But we're now supported from this horizontal support area and the 50 daily moving average. So, you know, that, let's say that should make us more neutral. And in general, I think, being neutral, the USD yen is probably the best idea. I mean, sometimes it decides to follow yield, sometimes it decides to follow risk, sometimes, it does something in between. And, volatility has really, really gone down, especially, if you compare with, the past. Let's see if we have any more questions. Q&A. Okay. What do you think about the PMI report? You know how it is. The PMIs are actually extremely important. I mean, many people think that since manufacturing is now, 11% of the US GDP, that manufacturing is like not that important. But we haven't had a single instance that manufacturing was sending, red signals and the economy didn't go in recession. So 11% or not, I don't think that we can remain in a contraction having to do with manufacturing and the economy not going in a recession. So I do think that PMI, ISM, and those indicators are actually the most important indicators to watch. And so far, they've been sending bad signals about what can happen from here. Now, having to do with the S&P, look at this. I mean, the S&P is pushing once again this trend line resistance. So I'm pretty positive here. If the ISM gives us a good number, I think that we're going to get a breakout today, and we can easily end up closing above this trend line. That would, in my mind, trigger an extension higher. So I think in that case that we can easily make it to the 161.8% extension of that last corrective move lower at 3,125. So I wouldn't fight this. I mean, if we do get a breakout, I wouldn't be fighting it. I wouldn't be trying to fade it, because I think that there's going to be quite a lot of stop losses getting triggered, and I think there's going to be new buying happening there. So, you like it or not, from a macro perspective or whatever other perspective you want to look at it, you have to respect what is happening here. And, as I said, like many days ago, this is an ascending wedge, but it is not a steep ascending wedge, because a steep ascending wedge is always a terminal formation, always. But this is not a steep one. So, this is the type of wedge that can easily, I mean, it is better describing it as an ascending triangle, okay? Of course, geometrically speaking, it's the same thing, but just to distinguish it having to do with steepness. So, this is an ascending triangle, and it can easily end up breaking to the upside, and it can easily produce an extension higher. And as I said, 3,125 is a nice fib extension to look for. Out of curiosity, I think it's not a bad idea also seeing if we get some type of a confluence with the bigger corrective move we had here. Let's see where the 127 of this move is. $3,107. Okay, so yeah, 3,107 is one level. 3,125 is another level to watch here. 141.4 is not an extension I ever like, to be honest. So let's completely remove it from there. And there you go. This is a possible zone of interest if we get a bullish breakout. Let's make it different. There you go. There. So I think this is, the next area to look for as resistance if we get a breakout. Now, if we get rejected, then we might see another move lower towards the confluence of this ascending wedges support and the horizontal support area at 2960. So, a rejection opens the door to 2960. A breakout opens the door to 3,110, 3,125, somewhere there. So, and obviously, whatever happens here with the S&P, no need to start going through the indices, like what is the Dow Jones going to do? What is the Nasdaq going to do? Because they're going to do more or less the same. By the way, the Nasdaq, if you want to look at this wedge, still has some room until it actually ends up testing resistance.
That's the zone.
So, yeah.
Yeah, that's what I'm looking for. Yeah, we could always get a throw over.
Of course.
Reading Jim Welsh, there are more cracks in the AD line, etc., in NASDAQ than in the general market S&P.
Yeah,
Steve?
and big part of the rally we've had in the recent years.
Yeah, has been FANG.
Yeah, has been.
And they're not at new highs except for Apple. And Apple just tested an old high. But remember, Steve, we were talking about Microsoft had to come out of that triangle. Mission accomplished. It's done it.
Oh, yeah, there was no question about it
Apple,
technically.
Yeah.
By the way, keep in mind that Apple is at new highs, but keep in mind that Apple as a company, sales and everything else, is like worse off than it was up there. This whole move higher has been simply the magical effect of buying back stock and you name it. But that's not the exception. Having to do with Microsoft, and yes, coach, we've mentioned multiple times how good Microsoft has been in showing us the correct path, having to do with what indices are going to do. And you're absolutely right. Not only Microsoft broke above this range, but it actually gapped above it. So
it was on a contract. So back under 140, I think it was some contract they beat out Amazon on. Back under 142 is going to be.
That is very correct. It beat Amazon in a multi-billion.
And that's because the administration doesn't like the Washington Post, possibly. Who Bezos,
very likely.
Yeah.
Very, very likely. So, we have an area here like roughly 142. As long as we stay above 142, Microsoft can extend higher. And, if we just want to, if we just want to take the simple rule, which is
the width of the rectangle.
Yeah, the height of this formation. I need to remove the magnet. Okay, the height of this formation.
Yeah.
And extend it. Let's change the color.
150.
And extend it. We're gonna get a target that is roughly at 150.
Okay.
Exactly. There you go.
Okay, Steve.
And look at this coincidence. Look where 150 would take us.
Yeah. Right.
Right.
Right to the wedge line. Yeah.
Yes, exactly right to the wedge line. So by going to 150. We both complete the range's extension and find ourselves on major resistance.
And if the definition is correct, and I don't know if it is because it elongated, that was a 4, that whole sideways movement, and this is 5, which also has a terminal aspect to it.
That's a good question. We can ask Greg next time he's here. Yeah. We can ask him to make a count for us here in Microsoft. Keep in mind that as you see also the RSI was breaking higher, this RSI trend line. So we do have confirmation that this is probably
great short up there.
A valid breakout.
I'll buy puts up there.
At 150, yeah.
How about crude, Steve? If we're not done in risk, crude, although it had a negative week, it didn't respond to risk as well this week. It still looks to me like there's a chance for another rally, maybe back to 50. It's premature, but 59, which was also an alternate count Greg had presented while you were on another one of your vacation days.
Yeah, we showed crude yesterday saying that it is at an important juncture because it was retesting again this ascending channel, and as you see today it's recovering. Yeah, so as long as this is not a perfect channel, I mean, you can draw it like
what a line's destiny is? Every line you draw to be broken.
Oh yeah, absolutely. Eventually
a trend line's destiny is to be broken. What a sad destiny. Or that poor little line.
Yeah, but isn't that how life works in general?
Yeah.
Huh?
Yeah, we all have trends and cycles, and
I mean, everything in life has an expiration date, right?
well, yeah.
Be it a trend line, be it a human being, be it, some kind of a phenomenon, whatever.
Yeah, I'm already past mine by 5 years. Anyway,
you're
so
not.
anyway, I'm past my expiration date, so I don't know what it makes me. An expired FX trader? What?
Grigori. Sorry, I was sorry, I didn't pay attention because I was
Oh,
reading a
that's
comment
okay.
from
It was not.
Grigoris, who says that the first starting point in the SPX chart is wrong. First of all, I totally understand what you mean. I mean,
What does he mean?
What he means is that there is one way to draw this, which is taking into account that high as well. But he also means that there is an alternative way to draw it. And yes, there are always alternative ways to draw it. And that way that he mentions, from what I understand, is this. Let's make it a little bit better so taking into account these points. So in that case, if that's the case, Grigori, that makes it even more interesting, as you see, because call it a coincidence or not, then if you want to take into account this trend line as the wedges trend line, and you believe that this is less important, so let's make it intermittent, let's say, then we get a triple confluence of resistances more or less up there.
Yeah.
Okay, so that's what he means. And it is a valid point. I mean, you can draw it like that as well. Now, the reason I didn't draw it like that is because we took that low and logic says that you're going to take the closest high, which was that one. But, this is a valid trend line as well. Let's see if we extend it. Does it actually touch any other?
Thank you, Rick. And you know why?
Yeah, something like this.
Gregorios is another technical analyst.
Oh my God, they're going to ban us forever.
He liked it. Anyway, so, we all get a little anal about our charts. You have to admit it, our lines, your line's wrong. You're taking the wrong fib from the wrong point. And anyway, thank you very much. Okay.
Yeah, but this is a possible interpretation. That is
so
true.
What, Gregor? I'm an ex-bank robber. So what? You're an ex-bank trader? I came in and took your profits.
if only it worked like that.
Yeah. Anyway, go ahead, Steve. Oh,
do we have an
almost interview time. Yeah, Don Mead
that's what I wanted to ask. Oh,
yeah.
Okay, nice.
And he's here. Okay. He's watching our show.
Go ahead then, and we're going to be in the chat room, and we're going to closely monitor to the ISM number because, as we said, it is going to be very important.
When is it? In 2 minutes? The ISM?
I think local time it's 4 o'clock. Let me see. 45 minutes from here.
Okay. Yeah. Thanks, Steve.
There you go.
Good weekend.
US market PMI fine. Okay. Bye-bye.
Have a good weekend. Okay, Don, you're here twice. I'm going to promote one of you. I hope it's the right one. We
had a question, by the way, from Mayas about Aussie, Swiss. Sorry, I saw it too late. Aussie yen, euro yen, pound. Oh my God, like 10 of them. Okay, I can have a brief look at them if your guest is not ready, Coach. Otherwise, on Monday.
Go ahead. It looks like he registered twice, so I think I chose the wrong one. Okay, so the question about euro yen, we saw that yesterday, and the reason we did was because it was, at an important junction once again. I mean, it was retesting that ascending channels resistance, and we've moved below it. But as I said, 120 is support here. So as long as we remain above 120, it makes sense to have a bullish bias. But having
having gotten rejected multiple times from this channel, I would be careful below 120. So briefly, that's it with this. Now having to do with pound Aussie. There you go, pound Aussie. Pound Aussie, very nice rejection from the expanding megaphone formation. You can call it expanding triangles, resistance, but the move lower so far looks corrective in nature. So nice rejection from new highs, from an important trend line, but the price action following that doesn't tell me that it actually wants to reverse lower. So it looks to me like pound Aussie is going to make another attempt in attacking that trend line sooner rather than later. Okay. Now,
Okay, we're ready.
With your question, okay, I'll be done in 1 minute.
Okay.
He also asked about the Aussie yen. Aussie yen, you know, we had this bull flag, and I don't know exactly where that would imply we move to, but I have a feeling there it is. That's going to be a confluence of resistances, and there it is. So, you know, as long as we remain above 74, next area to watch for is 76. Keep in mind, we have a cluster of resistances around there. We have
hear me, Dale?
Hey, hello. We can hear you loud and clear.
Is that you, Don?
Yeah, that was probably done.
Okay,
I'm
didn't.
here.
Oh, okay, Don. All right.
So watch for 76 above, as long as we stay above 74. Okay, below 74, you know, this rebound might actually be over. Thank you, Dale. Enjoy the interview, and we'll be back on Monday.
Okay, Steve. Have a nice weekend. Okay, Don. To share your screen, just see the little. Okay, you're on top of it. You just go that little green box that says share. Just hover your mouse around the drop-down menu. It's probably on top for you or on the bottom.
Oh, share
it's
screen.
usually
Share screen. Yeah.
yes.
Did that happen?
Nothing happened. You click it.
I clicked the little green box.
Yeah.
It should give you a window to choose, you know, screen or window you want to share. So then you have to do that before you start sharing.
It says share full screen. I've got you on. I've got.
We're just trying to see your screen now.
Are you there,
Don? Yeah, we're here. Can you hear me?
Yeah.
And your audio is breaking
can't
up.
see my screen.
Yeah,
Dale,
your audio is breaking up a little
I don't
too.
think the problem is his audio. I think the problem is
I don't know what
his
the problem
connection.
is.
Well, because you registered twice, maybe that's a problem. Okay, I had two Don, one Don me.
Is there anything I can do to change that?
Can you share where you're at right now? You can't share when you click on that green box, what happens?
On the green box, I get a window that says, "Will you follow ForexAnalytix?"
The share box is saying that?
Select screen or window.
Yeah, there you go. And then go ahead and then click share.
I hit allow.
Go ahead.
Nothing.
Huh. What do you think, Steve?
But the word share doesn't appear here.
Why don't you log out?
Are you sure that both of those you've promoted is him? Because one is written with N and the other one with M.
Yeah, they're both him.
Okay, and which one is the one speaking at the moment? The one with the M or the one with, which one did you unmute?
With the M.
With the what, sorry?
M.
Okay. Okay, can you hear us now, Don?
And it has an exclamation. Can you hear me?
No, The one with the N is the one speaking,
Why is that?
Dale. So the other one is.
Okay. Okay, his last name, Forex Skills, and is need. It shows that his screen does pop up, but we're not seeing it.
Yeah, we're not seeing it for sure.
So the only thing I could suggest is you log out and come back in and we try it that way, or we'll have to reschedule that.
Yeah, but
Log out of my computer?
No,
no. From
the room.
yes, from the application in general, from Zoom.
Let's see.
And
In the meantime,
Okay. Can you hear me?
can hear you, Don. Can you share your screen?
Do you want me? Pardon?
I want you to share your screen.
Okay, I've got my screen on. I've got my screen on both on two
You need to click the
monitors
share.
in front of me.
Click the share.
What is keeping
Click
you
the
from?
share. The green box. Click it.
Oh boy. I don't
We
even
used
see
this last time.
I'm getting nowhere here.
Okay, Don. We'll I'll bring in the room and you know, show you how to do it, and we'll have to reschedule then.
Okay, I'm sorry.
That's okay. You know, stuff happens. You know. Thanks for trying, Don.
Yeah.
I'll get you in next cancel. And should probably spend
All right.
10 minutes getting you in the room and showing you how to work it. I was looking forward.
It's not going to leave us time.
Okay.
So is I very much. I'm sure sorry this happened.
Well, you know what? All I could say is, it ain't nothing but a drawdown, not a margin call. It ain't nothing but a drawdown, not a margin call. But I ain't worried 'cause I still believe it'll fall. You said you were hot stuff, but that was just a lie. You said you were a guru, and then I started to try. Stay humble in the markets, or your account will die. Have a good weekend, everybody. Remember, don't just count your pips, count your blessings. Reduce your leverage, let your trades breathe, and enjoy the weekend. And Don, I'll get you in probably next week, okay? You know, I'm pretty sure we will. So everyone,
Right.
have a good weekend, everyone. Okay? All right. So adios, good hunting, and see everyone on Monday. Adios.